Good morning, everyone. When I first started putting my notes together, I was thinking kind of the standard stuff. You know, what's the contribution of agriculture to the Wisconsin economy, what's happening to employment trends and all that kind of stuff. But I think that the situation right now and the focus of the conference on kind of export markets, that it would be kind of a better use of my limited time to talk about what is happening with Wisconsin exports in kind of a broad sense, to kind of see where are the trends, where does agriculture fit into that, and some of the things that we need to worry about. So this is a sampling of some news headlines from the past week. There's really kind of a flood coming after the World Economic Forum in Davos, Switzerland. And there's things like Trump threatens new tariffs on Canada over China. Canada had just gone into negotiations with China to kind of get more, not free trade, but kind of to cut down the tensions between Canada and China and open up export markets. The reason that Canada's doing that is because they realize that their relationship with the U.S. is at risk, and they need to protect their own industry, so they're looking at alternatives. After Davos and the discussion about Greenland, the European Union has basically said that a trade agreement that we just negotiated, we're going to shelf that. We're going to set that aside, and we're just going to think about it. But the other thing that's really happening here, and this is from a larger economic perspective, and this is not just from the last couple of weeks, but the trade policies over the past year has just been kind of a tremendous amount of uncertainty. The tariffs are on, the tariffs are off, the tariffs are changed, and it's creating uncertainty, and the ag industry is not independent of that. Kind of the uncertainty around what is China going to do with soybean purchases. There's a lot of unknown here. And from an economic perspective, one of the worst things that can happen to an economy is rising uncertainty. There's kind of, you remember when Donald Rumsfeld was Secretary of Defense and he made that comment, and when we went into Iraq, he said, I'm paraphrasing here, he said it a little differently than this, we know what we know what we don't know what we don't know. And people kind of went, what kind of gobbledygook is that? What he was talking about really was, certainty, we know it, okay? Risk, we're not sure, but we can make a really good educated guess. Okay, do you think interest rates are going to go up? Do you think they're going to go down? You don't know for sure, but you can make a really good guess. And then there's uncertainty. We don't know what's happening. Uncertainty is really terrible for the economy, because if you're a business owner or you're a consumer and you don't know what's going on, what's your immediate reaction? You back off. You don't make that major purchase. You don't make that major investment. And what does that do to the economy? It stalls the economy. And that's one of the concerns that we have right now. This is, there's a group that's the Economic Policy Uncertainty Group. And what they do, and actually one of the founders of this is a political science professor on campus here. I didn't know that until I was looking this up the other day. What they do is they kind of track the media. And they have certain kind of algorithms that they use, that they track certain phrases that are appearing in the media. And one of them is this trade policy uncertainty. And it goes back to January 1985. And you can see that there's a fair amount of stability here, except for two time periods. One was in the early 1990s, and that's when the Soviet Union collapsed. That's also when NAFTA was put into place. So there was big changes. There's a fair amount of uncertainty. Then it was fairly stable. Actually very stable, until Trump's first term. Then there was uncertainty. Then the Biden administration came in, we went back to a period of stability, certainty, and then the spike. And that is an 8,000% increase, an 8,000% increase in the uncertainty. The spike was the Liberation Day. Any of you remember what happened to the stock market after that day? It was not good, okay? This goes up until about a month ago. Okay, I think when this is updated, it's going to spike back up a little bit because of all the kind of the chaos that's coming out of what just occurred in Washington. This is not good for the economy. Okay? Now, what's the data tell us? Okay, this is, oh, the PowerPoint shifted a little bit here. Anyway, what we've got here is for the US economy, this is quarterly, the percent change is an annual rate, and it's kind of coming out of COVID. And you can see the spike coming out of COVID, and a lot of what that was is just kind of catch up. Remember the stories about all the container ships that were sitting off the coast? They were waiting for the ports to open up, and then the ports opened up. That spike is kind of that bottleneck opening up, okay? So we kind of see, fairly robust growth in imports and exports. There was a period in 2022 that the economy kind of went into a slowdown period there. There was talk of a recession. We didn't go into a recession, but there was talk of one. But now look at the most recent data, and this only goes up to the third quarter of 2025. The fourth quarter data is not available yet. Notice that spike in imports in the first quarter. That was essentially Trump announcing Liberation Day. So what did a lot of firms do? They import it really quickly to get ahead of the tariffs. Then the tariffs come into place, and what happens to imports? They drop. Okay, so this is kind of, we see the effects of the tariffs in some of the data now. Okay? Got to push the right button. Now, what does Wisconsin export? These are the top industries that Wisconsin are exporting. And what I've done here is I've taken an average from 2018 to 2024. So this is an annual average over that time period. And the reason I took an average is that there's kind of annual ups and downs and whatnot. And if you take an average over it, you kind of get a little bit better picture here. Our biggest is navigation, medical, and control instrument. It's medical equipment. It's basically GE. Any of you know that GE plant that's over on the east side of Madison? That's part of it, okay? Ag and construction manufacturing. John Deere? Is it John? No, what's the one that was up in Dodge County? John Deere, okay? It's companies like that. Dairy is our largest agricultural export, and that's not surprising. Okay, now that's dairy, that's not farm dairy, that's dairy processing, that's primarily cheese. Animal slaughter and beef processing, and then foods that kind of that don't fit the categories that this particular data has. So Wisconsin agriculture, there is a fair amount of exports here. So Wisconsin agriculture is kind of exposed to kind of the uncertainty with the trade policies that are going on right now. Okay, if you look at Wisconsin exports over time, the top line is total Wisconsin exports, and you can see that it kind of, it leveled off, it increased, it leveled off a little bit. But look at Wisconsin farm and food processing. Wisconsin farm and food processing, it's not so much the farm products coming out of the farm gate. Indeed, if you look at what's the farm gate, what's coming out of the farm gate, it's primarily grains, it's soybeans, okay? And that's why that trade relationship with China is so important. A lot of our exports is coming from food processing, okay? And that's a lot of cheese, okay? Indeed, if you look, Wisconsin's exports, that's $24 billion. Is that billion? No, that's billions. 24 billion, beg your pardon. Wisconsin agriculture accounts for about 12% of Wisconsin total exports. And if you remember the kind of the contribution of Wisconsin agriculture to the Wisconsin economy that Jeff and I did, that lines up with about the contribution that the industry has to the state's economy. So it's about 10 to 12%, okay? The bulk of that is food processing materials, okay? What specifically are we processing? There's 3 blocks here. The top block is food processing. That middle block is support agriculture, forestry, fishing, forestry products, and then that bottom block is actually inside the farm gate. That bottom red line, that's soybeans primarily. And that's why the trade policies with China is so important. Okay, but again, you can see the big ones: fruits and vegetable, specialty foods, dairy products, again, that's cheese, the animal slaughtering and processing, and then this food category that doesn't fit into these other categories. Okay? Now, who are our biggest export markets? We export to a lot of countries. It's really kind of impressive in terms of how many countries that we export to. It's over 150 different countries that we export to. Our three biggest are Canada, Mexico, and China. Germany then comes in, Japan. But the big three are really Canada, Mexico, and China. And that's why trade relationships with these three countries are particularly important to Wisconsin and Wisconsin agriculture. If you look at the top exports to Canada, again, the biggest one is agriculture and construction and machinery equipment, converted paper products as part of the supply chain for the paper industry, again, foods, fruits and vegetables, and then dairy products. Okay, these are all products that are being imported or exported to Canada. Okay. Now, this is the map of where our dairy products, and again, this is not milk, this is dairy processed, primarily cheese. Where is it going to? Again, the big three are Canada, China, and Mexico. South Korea and Japan are coming into play. But we're exporting all over the world. Okay, so it's not just our immediate neighbors. Okay, this is kind of the trend. That's kind of messy here. What I want you to kind of look at is where's the growth? The growth isn't with Canada. We've had strong trading relationship with Canada going back years and years. That's fairly stable. There is some growth there. There's some growth with Mexico, but the real growth is with China and to some extent South Korea. Okay, and again, this is dairy exports. So when we're looking at export markets, that Asian market seems to be where some of the growth is occurring. How can we better leverage that? Okay, but China, again, if we get into a trade war with China, our dairy industry will be exposed. Okay, now what are some of the takeaways from this? One is the uncertainty around trade policies, and what it's doing is that it's undermining confidence. One, it's undermining confidence in terms of prices for both exports and imported inputs. We're not sure what the prices are going to be because we don't know, one, what are the tariffs, and then how much of those tariffs are going to be passed down to the consumer, the farmer, or the food processors. Okay? Paul's going to talk a little bit about the impacts on the inputs, on the input side, particularly like fertilizer. Financing options. Is there too much risk? Farming is highly dependent on access to credit. If there's a lot of uncertainty in what's happening to prices and export markets, bankers are going to start to get a little bit more conservative. So access to finance might be at risk. The ability to plan for future investments. If there's uncertainty in the market, that decision to make a major investment may be delayed. What does that do to the economy? It slows the economy down. Okay? Will the long-term trading partners start to look for alternatives to the U.S.? Okay? Is the U.S. becoming undependable as a trading partner? Why did Canada start direct negotiations with China? One, they wanted to repair some of the relationships that they've had. They've had some stressed relationships with China. But what they want to do is that they're basically saying that the U.S. is becoming undependable as a trading partner. We need to look for alternatives. China. Okay? Brazil right now. Who is the largest producer of soybeans in the world? Brazil. Okay? If China is uncertain about our stability or the stability of our trade policies, where's China going to go? They're going to go to Brazil. For example, suppose that you've been working with a particular supplier for years and years and years, and suddenly you start to have problems with that supplier. And you decide, I'm going to start looking at other suppliers. And you find another supplier. And suddenly you find, hey, this is a pretty good relationship. What are you going to do? Are you going to go back to your original supplier, or are you going to go with this new supplier? That's what we're starting to see with some countries. Canada's recent negotiations with China, that's why Trump was so mad, and his immediate reaction was, we're going to impose another tariff if you do this. That's just driving Canada into China's kind of position. Europeans' free trade negotiations with South America. The EU basically has opened up a free trade agreement with the South American countries. They've been working on that for years, but with the uncertainty around trade right now, that kind of motivated them to get that going. So now there's a free trade agreement between Europe and South America. Where does that leave the U.S.? Does it leave the U.S. sitting on the sidelines? The foreign exposure to U.S. debt. This is the one that I debated about whether I should share this or not. Okay? And the reason, and this is a headline from a couple of days ago, is Trump's tariffs threaten sparks of new fears of Sell America trade. This is something that Denmark has recently done. Denmark, if you've been following what's happening with Greenland, Denmark has basically come out and said they're going to start selling off U.S. debt. Okay? If you look at who owns our U.S. debt, a lot of it is in international markets. Okay? People ask me a lot of times when I do economic outlook forums and whatnot, they ask about the deficit. The deficit in and of itself is not that bad. Okay, well, the way the level that it is now is not good, it's not sustainable. But the real threat is who owns the debt that we have to sell to pay for that deficit. Okay? Denmark is selling off our US debt. What if Europe, in mass, decided to start selling off US debt? That could be a catastrophe. Now, some argued that Europe would not do that because it would trigger a worldwide recession and they would be sucked into it. But the trade negotiations have gotten so frustrating that Europe is kind of thinking, this is our last option. That's the uncertainty that's coming out there, and this is the kind of stuff that's keeping me awake at night. And that's why I debated about whether I should share this or not, because it's pretty doom and gloom. So I hate to kind of leave this with kind of a cold water type presentation, but I think that that's kind of the situation that we're in right now. So Paul now is actually going to say, Deller, you're worried too much, we're doing great.